Fitch expects commercial aircraft deliveries from Airbus and Boeing will increase 7% in 2018 to 1,600 aircraft and at least 8% in 2019 to approximately 1,725 aircraft. Fitch also projects Bombardier and Embraer will deliver an additional 200 aircraft during 2018. This delivery outlook is a key element of Fitch's positive sector outlook in the global aerospace and defense sector for 2018, and it is also consistent with Fitch's expectation for the global airline capacity growth estimates. Fitch estimates the value of projected deliveries at approximately $130 billion, which is the financing requirement for new aircraft in 2018. Up to $70 billion could also be required for used aircraft transactions, as approximately 10% of the global fleet changes hands in a typical year. We believe the aircraft finance market will be able to support the delivery outlook. The bank market remains very healthy in aviation, and secured capital markets issuance from airlines was robust in 2017. Fitch sees indications of this continuing into 2018 with the possibility of increasing issuance outside of North America. Unsecured airline issuance also continues to grow, with more airlines achieving investment-grade ratings. Drivers for the delivery outlook include continued strong global airline traffic growth, particularly in key markets like China and India, and near-record airline industry profits. The aircraft order backlog of more than 12,000 aircraft is also near an all-time high, which also supports the outlook. Fitch estimates this backlog is valued at more than $900 billion. A risk to the outlook is delays on new programs. This includes production ramp-up on new engine programs, which were a source of some delays in 2017 and continue to be a watch item into 2018. Fitch continues to believe that the development cycle is currently a greater source of risk than the economic cycle. Nonetheless, economic factors are another risk to watch in the cyclical sector. Our outlook would likely be affected by an economic downturn, credit market disruption, or a trade war. This last factor is of note given that China is taking about 1/5 of all deliveries in the current market.
Our 2018 outlook for aircraft leasing is stable. This is driven by strong industry fundamentals as evidenced by continued growth of global air traffic, along with steady leverage profiles and largely accommodative funding markets. That said, a key risk to look out for in 2018 is rising competition, particularly in China, which could place pressure on industry lease yields. Chinese aircraft lessors are benefiting from rapidly growing domestic passenger travel and have pushed hard to capture more of it. 42% of Chinese aircraft deliveries have been lessor-owned so far in 2017, up from 33% in 2012. Chinese-backed lessors are also active in new delivery sale-leaseback transactions and in the leasing of older aircraft. Another key risk to watch in 2018 is unforeseen airline customer bankruptcies, which could be driven by competitive pressures, regional shocks, or a spike in oil prices, among other things. We saw some meaningful airline credit events in 2017, notably Alitalia, Air Berlin, and Monarch, but these proved to be manageable for the rated lessors. There is a large disparity between the credit profiles of EMEA airlines, and any lessor that has high customer concentrations could be adversely affected if more bankruptcies occur. Over the past few years, the aircraft leasing industry has been characterized by growth via consolidation and new partnerships. The Avolon CIT merger and the DAE AWAS merger resulted in larger players with stronger franchises. At the same time, Air Lease entered into a new joint venture, and GECAS established a new financing platform, both with asset managers that want to invest in commercial aviation. Further meaningful consolidation is unlikely in 2018, absent a material market shock that pressures smaller performance and lowers currently strong valuations. But we could see more financial partnerships announced between established players and credit investors seeking to lend against hard assets, supported by the platforms and industry knowledge of the lessors.
Aircraft ABS continues to benefit from positive fundamentals present in the sector, which is driving our stable outlook for asset performance and ABS ratings in 2018. Factors supporting performance includes anticipated strong air traffic growth and thus continued robust demand for aircraft, which will then in turn support values, lease rate factors, and ultimately ABS transaction cash flows. However, we are cautious on the outlook for 2018 given sector risks always present, which is the highly cyclical nature of the airline industry, along with being prone to material shocks and sensitivity to fuel prices, which can impact airline profits, aircraft demand, and values. Another risk we see is downward lease rate pressure, driven by the intense competition in the leasing market, especially from recently established players who are trying to grow rapidly. This includes new Chinese lessors entering the market. Lower lease rates in the market can negatively impact lease cash flow collection in ABS transactions and result in slow note amortization, pushing up LTVs. Despite this, we expect stable ABS performance, including cash flow collections, within our expectations given current lease rates and demand for aircraft globally. We always keep a close eye on aircraft valuations. Certain current generation aircraft models are nearing the end of their production run, which can drive sharp value declines as the deliveries of replacement technologies ramp up, including the new Boeing 737 MAX and Airbus A320neo. The impact on values is more likely to manifest on aircraft with declining in-service fleets and user bases. For example, smaller variants of the wide-bodies like the Airbus A330 and Boeing 777 and current Embraer 170 and 190 models. This risk can be exacerbated by the potential for a global recession or increases in fuel prices, which would accelerate the move to the new variants. One notable observation Fitch has made for aircraft ABS in 2017 is the increase of lessees in emerging markets driven by growing demand for travel in these regions. The shift to smaller, weaker lessees in securitized pools is driven by increased ABS issuance this year, coming from the newer, smaller lessors who focus more on the mid to end-of-life aircraft with these types of lessee credits. Across the board, Fitch is taking a deeper look into individual leases and lessee credits and applying more conservative lessee stresses where appropriate. We anticipate this trend will continue in 2018, and we expect newer mid-late stage lessors to continue to tap ABS as a funding source.